Sniper entry method using the Asia range. Second part. This probably going to be the last video for 2023, and I want to wish all of you Merry Christmas and Happy New Year. Let's continue to break down the remaining setups, so you will have more structure examples of this method. This right here could have been a failed setup. We have a liquidity, imbalance and demand zone, all the criteria to enter a buy trade. This setup failed due to economic news on US dollar. But we can avoid this situation by staying out of the trade before highly impact event. Because trading news is more like gambling and spreads are very high, so not a favorable environment to trade. Frankly, during this price action I would rather choose not to enter any trade. Let's move to the next day. During the open of Tokyo session, we have a continuation of the bullish impulse, then it peaks and dropped in downside direction. During the London Open, price printed the low of the Asia range and pulled back. So, during the first hours of London session we wait for potential fake out of the Tokyo range, and we look for sensitive zones above or below this range, because price tend to reverse from these levels. As we can see, we have several imbalance zones below the range. We can consider the low that was created during the London Open as a liquidity level. Based on my experience and back testing, I will not suggest a limit order. The confirmation for a trade should be only if price returns in the range and retest it, as it's shown in this setup right here. The final target could have been the Tokyo high, so when I see it in a retrospective, I assume that I would close the trade partially or break even. Let's continue to the next day. During the Asia session, price created an important liquidity above, with two peaks, and below, with one peak, created during the close of the session. Recommended broker is Hanko Trade. Hanko Trade is offering a diverse range of trading instruments and services. The most prominent advantage of Forex trading through Hanko Trade is the offer of low spreads to its customers. You can open a live account in seconds, because no verification is required. Fund your trading account with any of the major cryptocurrencies as Bitcoin, Ethereum, Tether and more. Hanko Trade's matching bonus option allows clients to enhance their account margin. The amount that is deposited by the client will be matched and credited into client's trading account. Sign up with the link in the description and deposit to receive your guaranteed 100% bonus. Price swept the liquidity on both sides, generating a buy and sell opportunity. The sell setup correlate with the fill of imbalance zone and gives extra odds for success. We can enter a sell trade after the red candle closes below the zone. The stop loss should be below the imbalance zone and take profit at support level below. Below we have a fake out, a perfect liquidity swept, with a candle closure above the zone. In this setup we have a classic stop loss below the wick and take profit at the Tokyo high. Let's continue. During the New York session, we had a strong sell-off. After these strong moves is almost inevitable for market to range during the Tokyo session, and this was exactly what happened. We have an accumulation during this session. This is almost a textbook wick-off accumulation schematic. I have mentioned in previous videos, the Richard Wick is considered one of the 5 titans of technical analysis, along with Dow, Gann, Elliott, and Merrill. The supply and demand strategies, smart money and stuff like that, are based on his principles. According to Wyckoff, the market can be understood and anticipated through detailed analysis of supply and demand, which can be ascertained from studying price action, volume and time. So, we can expect a reversal during the London session. As we can see, the breakout in upside direction was very clear and very different from previous fake-out setups. The change of trend happened during the London session. So, after the trend change, our goal is to wait for the next pullback in order to join the move. And as we can see, this pullback correlate with a breakout of the Tokyo range. We also have candlestick pattern confirmation. So, it's a sin not to enter a buy trade. It's recommended to use a classic stop loss below the wick. For the take profit level, you can use the edge of the imbalance zone above. Let's move to the next setup. We have almost the same formation as the setups shared on the previous video, but in the opposite direction. An accumulation below the Tokyo low that correlate with a demand zone. As you already know, the buy trade is recommended after the breakout and candle closure inside the range. The first target should have been the Tokyo high and the final one, at the yesterday high. Let's move to the final setup for this video. As we can see, we have a fake out in upside direction and supply zone correlation plus a candlestick confirmation that forms a valid sell trade. I hope you have enjoyed this part of the video. Thanks for watching.